with only a few deals recorded in the first quarter of 2013, mergers and acquisition activity in Nigeria is expected to pick up in the second quarter, driven mainly by regulatory changes in the financial services sector. To review M&A in the first quarter and what to expect going forward, we'll be speaking to Dafe Oraka. He's the head of corporate finance at BGL. Dafe, it's good to have you on our show today. Like I mentioned, somewhat moderate activity. Some of the notable deals that I remember are the UAC acquisition of livestock feeds. We do also know that quite a few companies seem to be bringing in their subsidiaries into the larger company. We have deals like that in Honeywell Flour and, of course, flour mills. What are your thoughts on the activity we saw in the first quarter, and what are the deals you are anticipating in the second quarter?
Okay, thanks, Wale. Like you said, the activities in the first quarter were pretty low. But I just want to cast our minds back to last year, where we saw about $7 billion worth of M&A deals. When I say M&A, I'm talking about mergers, acquisitions, corporate restructurings, and then even extending that further to include investments and joint ventures and other forms of alliances. So coming from 2011, where we had about $2 billion worth of deals, we saw about $7 billion worth of deals last year.
But a pretty slow start this time.
Pretty slow start this year. That doesn't mean there aren't deals that are being packaged and structured. Due to confidentiality reasons, we cannot mention some of these deals until they are announced to the market. But there are some deals in the financial services space, as you said. A few banks are still completing the exit or divestment, if you like, from non-banking subsidiaries. A few insurance companies are having discussions on consolidation or sale or acquisitions. We also have a few registrars' businesses being sold or acquired, as the case may be. So we think that early second quarter we'll see some.
So as early as this month, you think?
Yes, definitely. Just based on my own knowledge of activities in the market, as early as this month, some of those deals will be announced to the market.
What about in the oil and gas space? I know usually we don't hear about these deals until they're either completed or almost completed. Do you think we will see activity there as well? Because what I'm looking back into last year, of course, when you look at some of the divestments of some of the international oil companies, quite an interesting pipeline of deals there. Do you think we're going to see that kind of activity this year as well?
I mean, definitely. Nigeria's oil and gas sector is very important to our economy. And, you know, just looking at what we saw last year with a few of the IOCs exiting their upstream assets, and, you know, other players acquiring those assets, we expect to see further investment and acquisitions in that space, just because it's an important sector of our economy. But if you look at the non-energy related sectors, I think financial services and FMCG, because of our large consumer markets, will continue to sustain interest of M&A type investors. If we look at financial services, for example, as you mentioned, there's the regulatory induced M&A activity expected in the mortgage industry. There are new opportunities in the insurance space, and I'm aware that quite a number of insurance companies are talking to themselves, and a few insurance companies are looking for acquirers.
When we move back into last year, of course, quite a few interesting transactions with the likes of Tiger Brands, the deals they did. So a lot of foreign investors moving into the market. Do you expect that flow to continue this year as well?
Definitely. I mean, if you look at the drivers of M&A anywhere in the world, opportunities for synergy is important. The level of asset prices, of course, every M&A deal involves consideration. So where asset prices are is very important. The higher they are, the more expensive the deal. Government regulation also very important, and then just the general state of the economy in terms of competitiveness of returns, economic growth, inflation, and all other factors. Now, if you look at those four key drivers of M&A activity, Nigeria is an emerging market. With regards to synergies, there will continue to be opportunities for growth and for significant returns. I think that companies, local companies looking to take advantage of those opportunities will consider inorganic strategies. You mentioned international investors. I think that because of the fact that we have a large market, you know, there's been a lot of talk about competitive returns being generated in this economy, because we have those things going for us. On one hand, we'll continue to see a lot of interest among foreign investors, financial investors, strategic investors. We'll also see continued interest from big manufacturers looking to take advantage of our market. So
right. You mentioned asset prices. I think that's a very key point, especially when you look at the stock market. The prices in the stock market is key to transactions in M&A in particular. We've seen the market move quite a bit, gained well over 60% over the last 15 months. Your thoughts about where prices are today and in terms of being an enabler for deals? I think a lot of people speak about the consumer space and that being very ripe for transactions. We haven't seen an IPO yet, but people say it's only a few months away. What do you think?
Well, in terms of asset prices, you're right. There appears to be some recovery. I mean, the jury is still out about whether that recovery will be sustained throughout the year. But we do know that asset prices are not where they were 5-6 years ago. And we think that the M&A activity we've seen over the last 3 years has been driven by the fact that a number of targets are trading at a significant discount. Okay, that's just from the market side. But just generally across the economy, economic activity slowed down over the last couple of years, and that had an impact on asset prices. So I think that valuations are still relatively low compared to where we were 5-6 years ago, and that will be a key driver of M&A activity.
Okay, switching away from M&A briefly, like I mentioned, IPO market. What are your thoughts on that? Do you think we're going to see kickoff? We've seen quite a few rights issues so far this year, but no IPO just yet.
Yeah, you're right. Most capital raising activity that we're seeing, or we've seen over the last, end of last 2 quarters of last year and early this year, have been driven again by some strategic type of M&A activity, if you like. A number of key shareholders or promoters are looking to consolidate their positions, again taking advantage of low asset prices, to create value with possible with expectations of creating value and unlocking that value. Okay, so the types of deals we've seen have been, even in the capital raising space, have been rights issues, special placements, etc. For example, UAC just completed an acquisition of livestock feeds, and a key aspect of that deal was injection of capital into the company. So yes, it was an M&A deal, but it involved a special placement as part of the process. So yes, rights issues, special placements, we've seen some of that. In terms of IPO, I think the general feeling among market participants is that there will be an IPO sometime this year. The market appears to be prepared for it again. If the success of the UPD series is anything to go by, then it remains to be seen what that will be. Then we expect to see some activity.
Okay, final point will be on the mortgage sector. Like you mentioned, we should see some transactions there. Do you think international investors will play in that space? Of course, in the past, we've seen quite a lot of investment in the banks, but mortgage is a bit more specialized. Do you think that we're going to see some transactions there too?
My opinion is that you're not likely to see a rush of international investors into the mortgage space at this time, and that's just because structurally there's still quite a bit that needs to be done regarding mortgages in Nigeria. I mean, we talk about the Land Use Act, we talk about a secondary market for mortgages.
But I know that the government is trying to fix that.
Exactly.
With this mortgage refinance facility and all that.
Exactly. So there are several things that are going on. The industry, I would say, is still at its early stages, and so there needs to be a significant amount of investment first. There needs to be sort of testing of the market, if you like, before we will see international investors going into that space. Nonetheless, just based on my own knowledge of activity, there is significant interest among some local players in anticipation of some of these government reforms and opportunities created by policy.
Let's leave it there. Thank you so much, Dafe Oraka from BGL. Sharing interesting thoughts about M&A in Nigeria.